This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management is pleased to be one of the founding members of the Trade Finance Working Group launched on the 27th of January 2023. Created under the auspices of the Alternative Credit Council and AIMA, the Alternative Investment Management Association, the working group brings together alternative lenders in the trade finance sector to support the development of trade finance as an asset class, with the remit to raise awareness of trade finance amongst investors and address challenges to greater participation by alternative lenders in the sector. Joining this group aligns perfectly with TradeFlow's experience in this asset class and its mission to help reduce the growing trade finance gap faced by SMEs.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices struggled for traction on Thursday, as optimism over recovering Chinese demand was offset by concerns of weakening activity in the United States, after inventories hit their highest in months. Brent crude futures gained 5 cents to $85.13 a barrel by 07:05 GMT, while U.S. West Texas Intermediate, WTI, crude futures slipped 2 cents to $78.45 a barrel. Both benchmarks have gained more than 6% so far this week. U.S. crude oil inventories have continued to exceed expectations, which to some extent erodes the bullish sentiments brought from China's demand recovery hopes, said analysts from Haitong Futures.
U.S. crude oil stocks rose last week to their highest level since June 2021, helped by higher production, the Energy Information Administration said on Wednesday. Crude inventories rose by 2.4 million barrels in the week ended February 3 to 455.1 million barrels, close to the 2.5 million barrel rise that analysts expected in a Reuters poll. U.S. oil production rose 100,000 barrels to touch 12.3 million, its highest since April 2020. Canadian crude imports also continued to climb as the Keystone Oil Pipeline returned to service after being shut temporarily due to a leak in December, Kepler analyst Matt Smith said.
Moving on to the top news in the energy sector.
India's fuel demand slipped in January after hitting a 9-month peak in December, hit by lower mobility due to cold weather in parts of the country and a slowdown in industrial activity. Consumption of fuel, a proxy for oil demand, was about 4.6% lower than the previous month at 18.7 million tons in January. Data from Indian Oil Ministry's Petroleum Planning and Analysis Cell, PPAC, showed on Wednesday. Sales of diesel fell 7.6% in January from a month ago to 7.18 million tons, while sales of gasoline, or petrol, fell 5.3% to 2.82 million tons, the PPAC data showed. Festive season is over, and cold temperatures might have played a role, said Refinitiv analyst Ahsan Ul-Haq.
The surprise increase in the price of Saudi Arabian crude oil for March loading cargoes is being viewed by the market as a bullish signal that Chinese demand is ramping up as the world's biggest importer reopens and stimulates its economy. There are certainly increasing signs of revival in China's fuel demand, with passenger flights and road traffic rising strongly and indications that the country's huge refining sector is accelerating processing rates. It seems quite possible that China will be importing more crude in coming months. But the question for Saudi Aramco and the broader oil trading community is whether they will be buying relatively expensive Saudi oil, or whether Chinese refiners will successfully source cheaper alternatives.
Next, we have the top news in metal markets.
Copper prices rose on Thursday as traders assessed prospects of consumption picking up pace within weeks in the downstream sector of top consumer China. 3-month copper on the London Metal Exchange was up 1.5% at $9,025.50 a ton by 0825 GMT, while the most traded copper contract on the Shanghai Futures Exchange, March, rose 0.7% to 68,640 yuan, $10,119.42 a ton. Investors have been betting on a recovery in China spurred by country's removal of pandemic controls late in 2022. Demand could rebound later this month as many workers return to factories following the February 5 Chinese Lantern Festival.
Iron ore futures rose on Thursday, with the Dalian benchmark hitting a one-week high after 2 days of declines, as sentiment turned upbeat ahead of the release of Chinese lending data, a key indicator of support for economic growth. Higher growth forecasts for top steel producer and iron ore consumer China also helped lift the mood. Rating agency Fitch has revised its forecast for China's economic growth in 2023 to 5.0% from 4.1% previously, as consumption and broader activity are recovering faster than initially anticipated after the end of the zero-COVID regime. We will now look at the top news in the agricultural. India is considering extending a ban on wheat exports as the world's second biggest producer seeks to replenish state reserves and bring down domestic prices, government sources said. The current ban was scheduled to be reviewed in April, and top government officials from Food, Farm and Trade Ministries are likely to make a decision on an extension by the end of March, or early April, government and industry sources said, adding they don't expect wheat exports to resume until mid-2024. A jump in exports following Russia's invasion of Ukraine has pushed up local wheat prices, prompting India to ban exports in May, but that failed to stop domestic prices rising, as a sudden spike in temperatures hit last year's output.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.